My friends, what is going on? Welcome back to the channel. I hope you're having a wonderful weekend. I threw out there on Twitter that if we did a bunch of likes, I would get you a Tesla update and also talk a little bit about just things that I typically see in the market. So I've been doing technical analysis in the stock market for a little over 5 years now, I guess coming up on 6 years. And I see this happening slash play out over and over and over again. The last video that I did, I don't know, like 2 weeks ago, Tesla was back down here at the bottom of this pennant. I did think that we could potentially come down here and sweep out the liquidity. I still think that's the most likely path. However, Tesla decided to push towards the top of the pennant and nab all the breakout chasers before then potentially going back down and completing all that. So don't worry, I'll walk you through it. Also going to walk you through lots of examples of what I expect to see overall because it's just more common than not. Before we jump into the video, you guys know the deal. Nothing I'm giving you here is financial advice. I want you to make great trades for yourself, your family, and your portfolio. Also, too, when I'm talking about this, depending on what type of investor you are. So there's some people who, they actively want to trade their positions. Some people just want to buy and hold. Some people want to wheel trade their positions. Some people want to buy calls and puts. And just regardless of how you want to trade, even if you're I just want to buy and hold, that's okay. The technical analysis that I'm teaching here will still do you well because it will prepare you mentally for the dips that are always going to come. Every stock provides dips, large dips, 30, 40, 50, 60% pullbacks at different times. So even if you're like, well, all I'm going to do is buy and hold anyway, that's okay. It always, what technical analysis does for me, I have a very large Tesla position that all I do is buy and hold with it. And what my technical analysis does for me is it always prepares me for kind of the best case and the worst case scenarios. The way I approach trading and the market in general is it's always a if this then that type of scenario where it's here's my bullish case, here's my consolidation case, here's my bearish case, and I don't care what the stock does. I just care that I have a plan for what the stock does, for whatever path that it goes on. So that is my overall goal. Recently, I just feel like more and more people on Twitter are telling me oh, all you are is bearish or anything like that. And it's just not true. If anything, at the end of the day, I'm a perma bull because I believe in the long-term upswing of the stock market regardless. I just think we're getting into times of the year, both from a seasonality standpoint and an option flow standpoint, that it's very important to be very careful. And if you are someone who actively trade. So I have some of my portfolios buy and hold, some of my portfolio I will trade, some of my portfolio I buy calls and buy puts on. So it's, I do a little bit of everything. And obviously with what I'm posting, a lot of what people see is only the buying the calls and the puts aspect of it, because I'm not going to sit here and be like, hey, another week went by, held my Tesla position. But I do want to be clear that at the end of the day, that is the smallest part of it. The largest part of my portfolio is buying and holding and wheel trading. So like I said, at the end of the day, regardless of whether or not I think a stock goes up or down, at the end of the day, it's if it goes up, great. If it goes down, great. So anyway, just want to be clear on that before diving too much into the video. So having said that, thank you for tuning in. Like and subscribe, all that good stuff. And let's jump into Tesla. So on Tesla, once again, a few weeks ago, I was talking about Tesla coming down here and potentially taking out these previous lows because there's a huge liquidity pool between here and those Trump lows that I still believe is untapped. Yes, I still think we are going to tap that. I just think that's what she said. But I just think that we pushed up before we went down. That's totally fine. So Tesla this past week, or a couple of weeks rather, ran up here. Looks like it was going to have a nice breakout candle. The breakout candle gets rejected. We now have turned down. And in my opinion, the overall market, I think we're going to be seeing red overall the next potential 2 to 3 weeks. But I do want to be clear that if we don't start getting some significant red, we talk about this in my Discord all the time that bear's not a time is not a bear's friend. So if bears don't kind of take charge, what they fumbled several very good setups here recently, and if bears don't take charge, start making a meaningful pullback, then the market is going to continue to float up higher and higher. So this next couple of weeks, not only from a kind of the news that has come out, so we got some scorching hot inflation last week, we've got Jackson Hole on Friday of this week, we've got the window of weakness that's coming in with option flows. So there's never been a better time than about the next 2 to 3 weeks for bears really to step in and get some type of meaningful pullback. If that doesn't happen, if we continue to consolidate, it's been very mechanical buying over on the indexes for the last really about 3 months, pretty much all summer. It's just been very mechanical movement, that kind of low float, low volume grind up. And it's what it does, it just sets us up for one of those stairs up, elevator down type of scenarios. And that is personally not financial advice. You make decisions based that are best for you. Personally, I think we are setting up for a very overall potential rug style moment. Which could set up for 2-3 weeks of overall downside before, yes, I think seasonality will take over once again towards the end of the year, and overall the market will recover. So I'm never advocating for this is the end of the world and draw arrows going straight down. That's not who I am at all. I think that the overall market is due for a really good, healthy pullback and correction, probably in that kind of 8 to 10% category is what I'm thinking, before then kind of the overall seasonality of the year pushes the market back up. So, sorry, I said, let's get focused on Tesla. So Tesla, we pushed up. We got all the breakout chasers. 346.30 is a huge level that I've had marked up on my charts for a very long time. If we back out to the weekly chart, we can see why. It went out, we look left. So back over here on Tesla, even in 2021, it was just a huge support resistance flip area. I have to tell my traders this all the time in the Discord, that when you draw trend lines, you think of those as kind of like areas of interest. Too many times I see new people, they draw a trend line and they think of it as like a steel barricade where it's like price shall not pass, where really those trend lines or your supply and demand areas, it's a level of interest. So up here, when we reapproach this level, and this is a weekly chart, when we reapproach this level back in November of 2024, you can see that 346.30 area was still a hang-up level, even though Tesla was squeezing at a very dramatic pace back there. And then when it started to push back down, same thing, that 346.30 area, level of support resistance flip. Then when we pushed back up here at the beginning of May, look at it. Would you just look at it, right? The big area, support resistance flip. So when we go back here to the daily candles, it was a area that, and this is how the market traps people, is it looks like a beautiful breakout of this long consolidation period. Oh, Tesla's finally getting the breakout. It's over the trend line. We're going to full port calls. And then all you're doing is the breakout is happening right at a key support resistance flip. And so it bags all the people who are not paying attention to the historical issues with the stock at this level. So everybody just piles into calls here. Everybody's saying, oh, Tesla to 350 this week and beyond. Maybe even we touch 400 this week. And all it did, and this started Monday morning, just completely rips up. And so I said, and you can see a couple of times, yeah, it poked its head above this, but you never even got hourly closes above this level. So this was that Monday morning, everybody's piling in calls, Tesla to the moon, 350, 400, all-time highs, here we come. And then you run right into that support resistance flip. You get knocked down the rest of the day Monday. Then you gap up again on Tuesday, right to that area. You get a huge rejection. You go back up on Wednesday. You get another huge rejection. And now it's just buyer enthusiasm is clearly waning up here. So when buyers do not step in, at the end of the day, if you never learned anything else from me, hope you do, but hear this. At the end of the day, the only thing the market is looking for is liquidity, which means buyers and sellers. And the market is just a constant tug of war between those buyers and sellers. And when the buyers are dramatically overwhelming the sellers, that stock is going to move, and it's going to move very volatile to the upside. When vice versa is true, when the sellers are dramatically overpowering the buyers, that stock is going to move down. At the end of the day, the market wants that liquidity, and what it really wants is a lot of equal amount. It wants buyers and sellers to be in a state of equilibrium, because that's how market makers are always making money. Market makers can be exposed if there's way too many buyers versus sellers. Hello, GameStop. Market makers can be overwhelmed if there's way more sellers than there are buyers. So at the end of the day, market makers are always trying to stay net neutral in the market. This is why stocks consolidate more than they move. Now, obviously, if you, when in doubt, zoom out and you look at charts over a very long period of time, if it's a good quality company, that chart overall is going to be moving up. But stocks will go through very long consolidation periods. Tesla is one of those. If you've been a Tesla bull for any amount of time, honestly, most of Tesla's gains come in very short periods of time. What I love about Tesla is even in the consolidation factor of thing, it's still very volatile, right? So, I mean, Tesla since May, or really since the beginning of May, Tesla has been in a 280 to 350 range. So on most charts, that would be very, very boring. But you can see here, Tesla still moves at a very wide range, which means even while Tesla is consolidating, it is very tradable. And it has a ton of liquidity in it. Tesla is the most traded stock on the entire New York Stock Exchange. Therefore, when it's the most traded, that means there's the most liquidity. That means suddenly buyers can overwhelm sellers and sellers can overwhelm buyers and vice versa. And that creates your volatility. So, very, 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 very common in more highly traded stocks, the more fake outs and breakouts that you're going to get. Anybody who knows anything about technical analysis, for instance, they can do something like, okay, we have a bullish pennant right here. We go up and we consolidate and then we break out and then we retest and then we go, right? We've all seen the schematics of stuff that looks like that. But the reality is, remember, the market is set up to test both buyers and sellers to the max, physically, emotionally, and financially. So very often, what you'll get is you'll get a move like this, and you'll start to get a breakout in one direction, and then it turns into a failed breakout. And just like we always say, there's nothing more bullish than a failed bearish move, there's also nothing more bearish than a failed bullish move. And what's going to happen is when the buyers don't dramatically overwhelm the sellers on a breakout like that, then the market goes, okay, we don't have enough buyers to push this stock continuing up, so therefore we're going to hunt to the downside. If the market cannot find enough buyers on the breakout, or they find more sellers on the breakout than they do buyers, then that stock is going to go down. Now, it might break down a little bit. It might break down and be more dramatic. So, and like I said, don't worry, I'm gonna show you a bunch of examples like this, and you will find it on every stock. Now, before I go any further, full disclosure, I am a overall kind of contrarian thinker when it comes to the stock market and honestly anything else in life, where it's when a stock gets really popular on Twitter, that makes me more nervous than anything, or it makes me want to short it or buy puts on it. It's just when everybody's looking left, well, what's wrong with going right, or what is over here right? I don't know that I want to do what everybody else is doing. I don't know that I want to buy the stock that everybody else is buying. So it is just when I look at charts, I look at them as, what do I think? What is the way that the market can capture the most liquidity possible before a move happens? And that is how I plan on, honestly, when it comes to technical analysis, it's I'm not the greatest at drawing trend lines or anything like that. I really think personally what I do well, and I will still be wrong. Okay. I always tell my team I plan on being wrong 30-40% of the time. So that means I only plan on being right 60 to 70% of the time. That's why I have losses too. I thought back over here on Tesla, when it reached support, the most likely thing was for it to bounce. And therefore, I was like, I actually think we can take out the lower lows first. And we didn't. We bounced right on support and we started to push out. But now it's kind of getting to that point where now the most obvious thing was, okay, we're just going to push right on up out of here and nothing but blue skies ahead. And then now we've got the rejection and we rolled over. Lots of people lost a lot of money on calls last week. All you had to do was pay attention to the option flow on Tesla to know that a lot of people got bagged chasing weeklies, or they just took losses on longer term position because there was tons of calls that got closed out on Tesla. So now there's a point here where we have more sellers than we do buyers. And anybody who knows or got trapped back up here going like, dude, next time this thing comes up to 350, 360, I am out. I'm moving on. Regardless, it broke out and got several rejections. Not one, not two, but 3 different rejections. And now we've broken back lower. The good news on Friday is it did bounce off the 200-day SMA. That's going to be this red line. That's the 200-day moving average. That's the average price of the last 200 days. And it did bounce on that on Friday, but overall, I felt like it was a very weak bounce. I still think the market is very weak. So therefore, I think if the market is overall very weak, I think Tesla is going to be one of the weaker ones because there's a lot of people who, like I said, piled in calls. When the stock turns down, those calls start decaying, hit people stop losses, so on and so forth. People start diving into puts, and it kind of becomes that snowball that gets out of control real quick. And then when it sells off really sharply, then the reverse is happening. You get people who are taking profits on their short position, taking profits on puts, starting to buy shares at key support, starting to take call positions, and that's how the snowball, like I said, works its way back up. So what I think the most likely thing to do now on Tesla is I still believe that this Trump feud low is going to get tested again. I think that the most likely thing for Tesla to do is when you get this false breakout that gets rejected, then you're going to go explore bottom parts of the liquidity. I'll show you another chart that looks very similar to Tesla's right now, and that's going to be HIMS. HIMS was consolidating in this pennant look a long time. It had the breakout before earnings, then you got a rejection, then you got a fail, then you came all the way back down. So you started to break out, you got the rejection, now you're coming back down here. Now I'll bet HIMS probably dips below its 200 SMA just a little bit. There's just a huge liquidity pool right here that I think needs to be tapped into, and it'll probably come back down here into like that 35 level, and then it's probably going to go at that point in time. And that makes sense too with the seasonality of the market and where it's at. Let me show you another one. SoFi. I posted this on Twitter. It was a beautiful daily ascending triangle that broke out. Once it broke out, immediately you get a sharp rejection back in. So it looked like it was going to be a failed breakout. But all it did was come test key daily support, and then you got your move. So this is why we always talk about it's always safer to try to take something on a retest. Now, could SoFi have broken out and it just keeps running and running and running? Yes, and that is going to happen at times. But more than likely, you're going to test to see, okay, is this an actual breakout or not? And then SoFi obviously continued to run. But I posted it on this day right here at like 14. If you bought at 14, you would be very happy sitting up here at 23. Another one is going to be Nvidia. This is going to be when everybody was watching back in 2023, this head and shoulder look. And what you did, Nvidia consolidated for almost 5 months here. And everybody, myself included, we were all watching this head and shoulder look. It broke down for a little bit, swept out this huge liquidity pool that was sitting right here below the head and shoulders. And this is going to be one of those that not only what fuels this move is people are starting to pile in puts, people are taking out of calls. And what happens is you get these V-shaped recoveries. Then it pushed all the way up, completely took out the previous highs. So anybody that was short up here, it took out those previous highs. Then it came back, consolidated, and at the end of the day, that was an ascending triangle look that then broke out and ran. So you will see this a lot. And this one on Nvidia is a perfect example of there's nothing more bullish than a failed bearish move. You had a clear head and shoulder look. As soon as it swept out the lows and tapped into that liquidity pool, people bought support. You also get people who chase puts on the initial breakout. That's why it's always dangerous to chase initial breakouts. Now, I've done it before and I'll do it again if I think the setup is right. But anytime you chase the initial breakout, your risk to reward is going to be some of your best, but it's also going to be some of your riskiest. If you wait for the retest, sometimes you get the retest, sometimes you don't get the retest. So, but at the end of the day, you never lose money sitting in cash and being patient, right? So, anytime you get a move like this where you sweep out the lows and you sweep out the highs and it consolidates, but it consolidates bullish, your most likely move, I would say like 80%, is going to be to get another large move topside. AMD, this one, back over here. This is kind of what I'm anticipating on Tesla here. So it had this long falling wedge / bull flag. It retraced a little bit too far to be an actual bull flag, but it's the same consolidation. People get hung up on that kind of stuff way too much. All that matters is how a stock is consolidating is what tells you what's going on. But same thing here. It broke out, then it came down and it swept out all your previous lows, swept out anybody who had stop losses around the 200 SMA, and then same thing. You get a V-shaped recovery up and out of here. So that's why I kind of think on Tesla. Sorry, let me show you more here. Unity is another one. This is one of my favorite setups where a stock creates an inverse head and shoulder look, it breaks out, and then it consolidates into a bull flag. But look what Unity did. Unity pushed out the top of the bull flag, caught all the breakout chasers, came down, swept out anybody who was like, oh, now it's a failed bull flag. So you take out all the stops of all your buyers, then you get all the money of all the people who are chasing puts at that point in time, and then same thing, V-shaped recovery, up and out of here. So you will just see, we would all love these things to just play out perfectly 24/7, but you will see these type of double fake outs. QQQ, back over here in June of 2023, consolidated for forever, then it broke below, but all it did was come down here, take out the daily fair value gap that was over here. So the market came back, took care of the large imbalance that it had left behind, and then same thing, rocketed up and out of here. So it's very common. Now this one you didn't get the failed breakout up top side first, you just got the failed breakdown, but you will see this time and time again with patterns of a failed breakout or a failed breakdown, then the actual move happens. And it's just the market's way of grabbing up as much liquidity as it possibly can before taking off and leaving. Because right here, you've got the failed breakdown, and then it's basically a V-shaped recovery and gone. And anybody who's a little bit more conservative is like, okay, well, we'll get a retest. Oh, okay, now we're actually breaking out. I'll wait for the retest. And you did almost get a decent retest here, but overall, it looked like it was going one direction, immediately reverses to the other. So on Tesla right now, we have a failed breakout. This consolidated so long that I truly believe this failed breakout right here is not going to end pretty for Tesla. I think it's going to come back down here all the way to potentially like 250 to 260. And then as soon as you start losing the 200 SMA and you start losing all this, my personal opinion is there is just way too big of a liquidity pool that is right here that the market has not tapped into yet. And then you'll have people, oh, it was a failed breakout, now it's breaking down. And then they're going to start giving price targets of like, I anticipate 170 from here. And what it'll do is, what's the path that would screw the most people is you trap all the people who chased the breakout. Now we have a false breakout. Then you're going to get people who are going to chase once it starts breaking down. You're going to get people who chase that. And this will be the perceived end of Tesla. And then I personally think somewhere down in here I could see it going as low as about 250. If it does, I will say this, if it does start to break 250, then we could be in for a pretty ugly correction overall. I really think that. I overall still think that kind of worst case scenario, and I think I've talked about this before. I know I've talked about it with the Discord, but if I haven't, I'll go ahead and let you guys know. I think it could create kind of a massive double bottom up and out of here, because still overall we're staying above that previous all-time high trend line. So I don't think personally that we need to come down here and test this trend line again. I do not think that. What I do think is, and then I don't want to get too far ahead of myself, but I do think if Tesla comes down here, takes out this liquidity pool, then I think Tesla is set up for a massive squeeze that does take us to new all-time highs. But I will take it one day, one chart, one candle at a time. That's what I recommend for everybody else. Me personally, I have been selling covered calls like crazy every single time Tesla comes up to this 350 level. It's Tesla's, I'm willing to pay to see it. Tesla's got to show me that it is going to break up and out of here before, it's kind of, I'll believe it when I see it kind of deal. So I truly believe with this breakout, I don't think we're just going to bounce right here and curl up, but I do want to be clear. Obviously, we could. You have to leave room for every possibility. From a bullish standpoint, I absolutely see, kind of this falling wedge right here. So if the overall market just stays really strong, we don't get any type of pullback with like Powell and Jackson Hole or anything like that, I certainly am going to keep this on watch right here. That this was just a move back down here to the 200 SMA, and now we'll bounce out and we can go. That absolutely can happen. I don't think that's the most likely move. I think the most likely move now, especially if we don't kind of hold the 320 area, if we start to lose this 326 level, I think it's going to probably get ugly. I think selling is going to pick up if we start to lose the 200 SMA, at least for a short period of time. There's also a very large imbalance that was left back here on this hourly fair value gap. So I really think best case scenario overall for the bulls is we make our way back down here. You get a false breakdown that's very little down here to around like the low 300s, around like 310 or so, and then you can kind of catch right here. But that would mean this has to hold right here. And we already got a strong bounce out of there once. I think the buyers / sellers that you've got to test before Tesla can make any meaningful move out of here is this right in here, kind of around this 280. So I think the most likely move is probably a move here, probably get a reaction in here that kind of bounces up, H is over, and then somewhere in here, we're going to see a move, and it'll probably be relatively violent. The deepest, darkest despair will be if we start to make new lows past the Trump-Elon feud area. I still think, personally, that those people are going to need to be tested, the buyers in here, at least getting close to it. Also, if we back out and kind of look at this range that we've been in, so since kind of this bottom over here in April, if we run a fib from that bottom to the top, all we've done is come down here and test the 0.5 retracement. Typically, once again, not always, but institutions are buyers in what we call the discount zone. So the discount zone does start at the 0.5, but the fact that the 618 and the 786 haven't been tested at all in any way, shape, or form, that worries me. There's also a very large imbalance on the daily fair value gap right here that lines up pretty much perfectly with the 618. So that's why I think this golden pocket area, maybe even a little bit lower, is absolutely going to get tested at some point. And when I say the near future, I'm saying over the next couple of months. If Tesla has not made this type of move down here, I would say by sometime, end of September, middle of October, then we may not see new lows before it moves back up. I think the next 2 to 3 weeks is probably the really most important time to get a amplified move out of this deal, because I usually when Tesla does stuff like this, it's a kind of violent sort of shakeout style move. But I think you need to get over here below for sure, back in the 200s, below like a 275, down here in the 260s to 786, getting somewhere down there. And it could too, like I said, it could be coming down here and it could consolidate. And like I said, when we went in doubt, zoom out, it just turned into the world's biggest kind of more macro looking double bottom that came back down here off the previous all-time high trend line. So if you are a long-term Tesla investor, I think personally you need to mentally prepare yourself for that and how you might handle that situation. Just like I said in my last market update video, if Tesla can really start looking good over 350 to 360, then I think you probably make new all-time highs after that. It could really go on a real squeeze. So there certainly is that possibility. But when I look at the chart and I think what is the way that we screw over the most people? What is the way that the market can capture the most liquidity? I think it's a failed breakout to a breakdown, followed by a V-shaped recovery / squeeze up and out of here. So that's just how I feel like I'm seeing the chart as of right now. I'm sure there's going to be plenty of people who are like, no, all this is a retest, and it could be that picture perfect. But I don't think that's the most likely thing. Like I said, from a seasonality standpoint, from the events that we have coming up with inflation starting to pick back up, I think that's going to bring more uncertainty in the market. The market doesn't like uncertainty. I think we're going to see an 8 to 10% pullback, which in Tesla usually means about a 20 to 30% pullback. So yeah, let's just even see where so I mean that would be a 20% pullback. So I think Tesla's probably going to see a 15-20% pullback, and then I think what they're going to have to do, I think this earnings, which right now on TradingView says it's middle of October. Who knows if that's actually when it'll be? But I think the next earnings, because everybody's pissing and moaning about what Tesla earnings has been lately. I think the next earnings is going to be the one that can probably start to pull us up and out of here. But so I will say this, going into this next week, I'll finish up here. You have to hang on to these earnings highs, which you haven't yet. Overall, Tesla has put in a new change of character look. What does that mean? That means this. So since this top in May, we've been in a series of making a new low, making a new lower low, then making a new lower high, then a higher low, then a lower high, then a higher low, lower high, lower low, and then now this is our first opportunity to, we've made a new high, because we had lower high, lower high, lower high, lower high. We made a new high. Can we make a new low? If Tesla does put the brakes on and makes a new low, then overall our new daily trend is overall bullish. So the reality is the stock does this. It either makes a low, lower high, lower low, lower high, lower low. Then eventually you get a change of character, where all of a sudden the stock starts to make a high, but then a higher low, and then a higher high, and then a higher low. So at the end of the day, that a stock's going to do that. So what I would say is if Tesla can put in a decent lower high at some point here pretty quickly, then that also could be signs that hey, we may have a new bullish uptrend going. Once again, I know I keep saying this, but I think that's not the most likely case. But what I would be looking for is we still have a clear daily fair value gap right here. So somewhere, that kind of low 300s, 315, 310, somewhere in there in that 618 retrace. I think at a minimum, even if your overall opinion is, I want to see, I'm bullish. I think at best your bullish case is still a pullback, and then you put in a higher low that then pushes you up to a higher high. So Hope I wasn't rambling too much. I hope this video was helpful to you. I hope through the different charts that I showed you, all the different kind of like sweet possibilities that you're going to see. So just a pattern's never going to, not never, every now and then it'll just play out absolutely perfect textbook. And enjoy that when it happens, because that's not the most likely thing. The most likely thing is, just like in a textbook where you're like, oh, this is perfect reality. Reality is never as pretty as the fantasy teachings or anything like that. It's the love story is never as good as the chick flick that you watch, or a real life war story is never as cool as the cool war movies that you watch on TV. So reality is just, it's uglier than the fantasy aspect of it. And so every now and then you'll get a picture perfect, oh, that was a beautiful breakout retest, and then go. But at the end of the day, more often than not, and in my opinion, that's where I go back to that I'm right 60 to 70% of the time, wrong 30 to 40% of the time, is because more often than not, you're going to see these crazy liquidity sweeps and grabs and screwing people over and triggering stop losses before you see the actual move, or before you can catch the actual move. So if you'll start analyzing your charts with that mindset and kind of building out the path ahead of time, you'll be able to take more successful trades over the long haul, have a winning percentage, and be able to make money. That's my personal opinion. I hope this video was helpful to you. I will be posting on Twitter as I always do, so please follow me there. Colin_Gladman. And that's where if I see anything that dramatically changes from the videos that I talk about, like I said, I'll be posting it there. So like I said, please follow me there. Like and subscribe here. I appreciate your time. I hope you have a wonderful weekend. If you got kiddos that either have already started back school or about to be starting back, I hope and pray that they have a wonderful year. I got 4 kiddos of my own, so I know it's a crazy time for parents running around, but I hope your kid has a wonderful year. I hope you had a wonderful weekend. Much love, and I will catch you in the next video. Have a good one, my friends.